Welcome to this installment of the Deep Dive here on the Sands Channel podcast.
Great to be here.
Today, we're venturing into a really unexpected, but I think quite fascinating area.
Oh, yeah.
The surprising ability of large language models, LLMs, to memorize economic data.
Ah, yes. That is an interesting one.
Now, stick with us because this isn't just some quirky technical detail. It actually has some pretty significant implications.
It really does, for how we use these AI tools, not just for predicting the economy.
But maybe even in fields like biology, which we'll get into.
Exactly. It makes you wonder, doesn't it? Are these models genuinely, understanding economic principles, or are they just exceptionally good at remembering stuff they've already seen?
That's precisely the question we're going to try and unpack in this deep dive.
Yeah, our aim is really to explore how LLMs recall economic info, why this memorization is, well, a bit of a problem for economic forecasting.
A puzzle, maybe.
A puzzle, exactly. And maybe unexpectedly we'll draw some parallels to what this might mean for biological research, too.
And a lot of our chat today is drawing from that great paper by Lopez Lira, Tang, and Zhu, right? The memorization problem.
That's the one. Can we trust LLM's economic forecasts? It really lays out the evidence quite starkly.
Absolutely. And our goal here, as always, is to get straight to the point, give you the key insights without getting bogged down.
Quick and thorough.
Exactly. We know you're here to learn, so we'll focus on those surprising facts, those aha moments. Okay, let's dive in. When we talk about LLMs for economic forecasting, what's the fundamental issue we're facing?
Well, the core issue, it really boils down to the training data. These models learn from massive data sets.
Including tons of historical economic data.
Right, usually up to a specific date. They're knowledge cutoff. So when you ask these models to, quote-unquote, forecast something before that date...
Something that was in their training data.
Precisely. It becomes incredibly tricky to know if they're actually predicting based on learned economic patterns or just spitting back information they memorized during training.
It's like asking me to predict what I had for breakfast yesterday. I'm not predicting, I'm just remembering.
That's a perfect analogy. You already witnessed the event.
Yeah.
The paper gives some really compelling examples of this memorization in action.
Okay, like what?
Well, for instance, the researchers found GPT-4o, before its October 2023 cutoff, could recall specific S&P 500 index values for certain dates, like perfectly.
Not just roughly, but the exact number.
The exact number. And similarly, it could recall unemployment rates down to 0.1% or precise quarterly GDP figures from that pre-cutoff period.
Wow. That's incredibly specific recall.
It is. And you can see it visually in the paper, Figure 1. The LLMs recall S&P values just hug the actual historical data line almost perfectly before that cutoff.
Almost perfectly. But you mentioned there were occasional errors, like little glitches.
Yeah, that's the weird part. Occasionally there are these seemingly random spikes of error. It's not a flawless photographic memory, which kind of adds another layer of complexity. Is it trying to reconstruct and sometimes failing, or...
Right. And this leads to that idea of motivated reasoning they talk about.
Exactly. Think about it. If you know the outcome, you might subconsciously build your explanation to fit that outcome.
Like working backward.
Kind of, yeah. The LLM, having seen the historical data, might be constructing plausible-sounding economic narratives that just happen to lead to the memorized result. It looks like reasoning, but it might be driven by the known answer.
Which brings us back to that analogy you mentioned, asking an economist today to predict the 2008 crisis, but telling them to forget what happened.
It's fundamentally impossible if the knowledge is already in there.
So can you just tell the model, hey, ignore everything after 2010? Does that work?
Well, they tried that.
Yeah.
The short answer is not really. Explicit instructions often fail to prevent this reliance on memorized data.
Tell me about that experiment. They set up these artificial cutoffs.
They did. For example, they put an instruction in the system prompt for GPT-4o, telling it to only use data from before 2010 when predicting the direction of quarterly GDP growth.
Okay, so a clear boundary.
A clear boundary. But guess what? The model still achieved incredibly high directional accuracy, like 97-98% for the period after 2010, even though it was told not to use that info.
Whoa. So it was definitely peaking at its memory banks.
It strongly suggests it was. Because its actual predictive accuracy for data, truly after its real knowledge cutoff date, was way lower, down around 40%.
That's a huge gap, 40% versus nearly perfect.
It really highlights the difference between recall and genuine forward-looking prediction.
Okay, so instructions don't work reliably. What about masking? Hiding sensitive bits like company names or dates.
That seems like the next logical step, right? Anonymize the data.
Yeah.
But the research shows LLMs are surprisingly good at, well, seeing through the disguise.
Right.
They can reconstruct masked information from minimal context.
How minimal?
There's a striking example in Figure 2. They fed GPT-4o a heavily anonymized earnings call transcript from Ethan Allen.
Okay.
Company name gone, numbers gone, locations, time references, all masked. Just generic business talk left. And the model correctly identified the company as Ethan Allen, the specific quarter, and the year.
Get out, just from the general business jargon.
Apparently so. It pieced it together. It's kind of wild.
That really makes you think about what understanding means for these models. Is it just super advanced pattern matching?
That's a deep question.
Yeah.
It's certainly remarkable pattern matching, at least. And they tested this systematically, too.
On other companies?
Yep. GPT-4o was very accurate at identifying big names like Apple, Meta, Microsoft from similarly anonymized earnings calls.
So this ability to basically de-anonymize data is a real issue.
It is, because how can you trust its analysis of, say, Apple's prospects if it might just be recognizing the context and recalling memorized outcomes associated with Apple from that period?
Right. So the big takeaway here is, if an LLM looks like it's great at predicting historical data within its training period, be skeptical.
Be very skeptical. It might just be remembering, not predicting.
And that's huge for things like backtesting trading strategies, I imagine.
Absolutely huge. If your backtest success is built on the LLM just remembering past market moves, that strategy is probably worthless going forward.
Because the future isn't in its training data.
Exactly. The paper really hammers this home. Reliable evaluation of LLM forecasting must use data from after its knowledge cutoff. Data it genuinely hasn't seen.
Okay, so we've got this big memorization problem established. Let's dig into the specifics a bit. What kinds of economic data did the study find were most affected?
They looked across the board. For macroeconomic rates, think GDP growth, inflation, unemployment, Treasury yields. The recall before the cutoff was almost perfect.
Near perfect.
Yeah, very low errors. The mean absolute error for GDP growth recall was tiny. And directional accuracy, like was the rate above or below a certain point, was consistently over 96%.
Those are major indicators, so it remembered those very well.
Very well. Interestingly, for macro levels housing starts, the VIX index, non-farm payrolls, the recall was also strong, but particularly strong for the most recent 10 years before the cutoff.
A recency effect.
Exactly. It suggests the model has a stronger grasp, or at least better recall, of more recent data, possibly because it's more prevalent or detailed in the later parts of its training set. Makes intuitive sense.
Yeah, it does. What about the stock market itself? Indices like the S&P?
Similar story. Strong recall of daily and monthly levels for the S&P 500, Dow Jones, NASDAQ before the cutoff, low errors, high directional accuracy.
Did giving it context help, like telling it yesterday's price?
Sometimes, yeah. Providing the previous couple of days' levels occasionally nudged the accuracy up slightly. But again, the key point is the performance just cratered for data after the cutoff.
Right, the pattern holds. Pre-cutoff looks great, post-cutoff, not so much.
Precisely. And it wasn't just numbers either, was it? They looked at news headlines too.
They did. GPT-4o showed this really remarkable ability, almost spooky, to identify the exact date sometimes, or at least the month and year, of Wall Street Journal headlines from before its cutoff.
The exact date. Yeah, accuracy for the exact date was around 47%, which is pretty high given the task. Year identification was near perfect, month and year around 90%.
Wow! So it's like it has this internal archive of news events linked to timestamps.
It certainly seems that way. And, predictably, accuracy plummeted for headlines published after its cutoff date. More evidence for memorization.
Okay, indices, headlines. What about individual stocks? Did it remember specific company prices?
The recall varied a bit more there. Interestingly, it seemed better at recalling prices for newer, perhaps more talked about stocks like Meta and Google compared to older stalwarts like Apple and Microsoft.
Huh. Any idea why?
Maybe related to data density or volatility patterns in the training data. It's hard to say for sure, but context made a big difference here.
Context like?
Giving it the closing prices from the previous 2 months significantly boosted the accuracy for nearly all the Magnificent 7 stocks they tested.
So a little prompt helps it access that stored price memory.
Seems like it. It suggests the information is in there, but sometimes needs a nudge.
Okay, makes sense. What about broader groups of stocks, like small cap versus large cap?
Recall was generally weaker for portfolios of small, medium, and large cap stocks, compared to those big individual names,
Mm-hmm.
especially without context and especially for the smaller stocks.
Less data, maybe. Less prominent.
Could be. But the recency effect popped up again. Recall was better for the most recent 10-year period before the cutoff.
Consistent theme there.
And context helped again, too. Providing context improved the directional accuracy for all market cap sizes.
So it seems like this memorization isn't uniform. It's stronger for certain things, recent data, prominent indices or stocks, especially when given context.
That's a good summary. And those experiments trying to enforce fake knowledge cutoffs really drove the point home, didn't they?
Yeah, remind me about that again.
Even when they explicitly told the model in both the system and user prompts to only use pre-2010 data for GDP growth predictions.
Double instructions.
Right. It still showed suspiciously strong performance after 2010 in some test setups, particularly when only the system prompt enforced the rule. It really highlights how hard it is to fully constrain these models from accessing their internal knowledge base.
It's like the memory just leaks out anyway.
Something like that. And we already touched on the masking failure with the earnings calls.
Right. Identifying companies even when anonymized.
Exactly. High accuracy, especially for big firms. It shows that even sophisticated masking isn't a silver bullet against a model that's memorized vast amounts of text and can pick up subtle linguistic fingerprints.
Okay. This is all, well, quite concerning for anyone relying on LLMs for economic insights based on historical data. But you mentioned earlier this might translate to other fields, like biology. How does that connection work?
Yeah, this is where I think it gets really thought-provoking. Think about how LLMs are being applied in biological research now.
Predicting protein folding, drug interactions, things like that.
Exactly. Now imagine the training data includes millions of known protein structures or results from countless drug interaction studies.
Okay.
There's a potential risk, similar to the economic forecasting issue, that the model might just be recalling these known structures or interactions when asked to make a prediction.
So instead of figuring out the underlying biological rules, it's just saying, oh, I've seen this protein structure before, or I remember this drug combo caused X effect.
Precisely that. Is it truly generalizing biological principles, or is it accessing a vast, memorized library of past results? It's hard to tell just by looking at its output on known data.
And that recency effect we saw with economic data, could that apply in biology too?
I think it's highly plausible. More recent biological discoveries and research papers are likely overrepresented or more detailed in the LLM's training data.
Right.
So the model might appear better at predicting things related to recent research, not because it understands modern biology better, but simply because it has stronger memorization of that newer information.
That could definitely skew our perception of its capability.
It could. And think about the masking problem.
In biology, how would that work?
Well, researchers might try to anonymize biological data gene sequences, patient records, before feeding it to an LLM, maybe for privacy reasons, or to test generalization.
Okay.
But just like the LLM could identify Ethan Allen from generic business text, could it potentially reconstruct patient identities or specific gene functions from subtle patterns in anonymized biological data?
That's a bit worrying. Re-identifying patients.
It's a concern. Or, less dramatically, it might simply recognize patterns associated with known outcomes, leading it to recall specific results rather than generating novel biological insights based on the anonymized input.
So for biologists using LLMs, the lesson is similar to economics. You need to test it on things it hasn't seen.
Absolutely. Focus on out-of-sample prediction. Can it predict the properties of a truly novel protein it wasn't trained on? Can it predict interactions between drugs or molecules it hasn't encountered before?
That's where the real test lies.
It's exactly. Relying only on how well an LLM reproduces known biological facts data that was likely in its training set could lead to misleading conclusions about its actual predictive power or its grasp of biological mechanisms.
This really paints a fascinating and, yes, slightly unsettling picture across these different complex fields. So let's try to boil it down. What's the core message we should take away from this deep dive?
I think the key takeaway is that these large language models have a significant and maybe underestimated capacity for just memorizing their training data.
Whether it's S&P values or protein structures.
Right. And this memorization creates a real challenge when we try to interpret their performance on historical data. Yeah. Especially in economics, distinguishing prediction from recall is tough.
And potentially in biology, too, and maybe other fields we haven't even discussed.
Very likely. The parallels seem quite strong.
And the simple fixes, like just telling it, don't remember, or masking the data, they don't really work reliably.
The research suggests they have serious limitations. For trustworthy evaluation, the focus really needs to shift to performance on data the LLM definitely hasn't seen before.
Post-knowledge cutoff data, or entirely novel problems.
That's the gold standard.
Okay, so here's a final thought for you, our listener, to chew on. Given this incredible memorization ability, what does it actually mean for an LLM to understand or predict anything, whether it's the economy or a biological process?
Yeah, it's a fundamental question.
And how do we design our research, our tests, to get past the remembering and genuinely probe their ability to reason, to generalize in these complex domains?
It's crucial if we want to harness these tools effectively and responsibly.
Definitely something to think about, whatever field you're interested in.
Indeed. It forces us to be more critical about what we're seeing and how we measure success with these models.
Well, thank you for joining us for this really interesting deep dive into LLM memorization.
My pleasure. Fascinating topic.
If you found this discussion valuable or thought-provoking, please do like and subscribe to the SANS Channel podcast. It really helps support more deep dives like this one.
Thanks for listening.
Until next time.